All right, we've got to do a short and quick and sweet pre-Powell prep meeting. Here's the Scoopy Doodlies. We know we are lacking data. Nick T is saying this is going to be a great opportunity for the Fed to just go 25 BPs and kick the can down the road and not actually give us a lot of forward guidance because they're just going to say, we don't have a lot of data. But I actually dispute that. See, you already know this. Today is coupon code expiration day. Coupon code Schumer Siesta for the Meet Kevin membership and the Alpha Report. This morning, in the Alpha Report, these are the things I like to point out in the morning. I'm gonna give you a spoiler right now. But something has just shifted. And the Fed would be dumb not to talk about this. And I think they will. Look at the Atlanta Fed real GDP. We already know that the real GDP estimates are mega high. 3.9% is phenomenally high. This is like, forget soft landing. This is like mega boom level GDP. Now, that doesn't mean that it's going to be accurate, but what you have to see that's changed is this. For the last 2.5 years of us looking at the Atlanta Fed real GDP levels, we have always seen the blue chip consensus around 1%. It has consistently been around 1%. That means blue chip American companies have really only been telling us that GDP should be moving somewhere around 1%. And what did we just get? We just got a massive inflection point to the upside over the last 4 weeks. Now, how do we reconcile this with employment break-evens? Well, this is obviously what's critical today is I'm going to make you a menu of what we want to pay attention to when it comes to Powell today. So this is sort of our last minute little menu here, okay? So the first thing that I want to pay attention to is economic strength via GDP references, okay? These are going to be bullish stonks. It is very normal. In fact, we talked about this in the Alpha Report because that's what we do in the mornings. We set the stage. It is very normal to get a sell-off between now and Powell talking. Very normal to see a pre-Powell sell-off. But what we need are the longer term signals. And the best signal that we could get is color on what, this is probably the most important question. I don't know whether we're gonna get it, but what is the labor break-even rate? I believe the Fed thinks it's 20K. If they say it's 20K and ADP right now is showing 14K, we're actually decently in alignment. If they say break even is 0, that's actually bullish because it means without immigration, we don't actually need much labor growth to keep the unemployment rate stable. Now, what matters for recession is the difference between the break-even rate and the actual jobs report. So, if immigration high and break-even rate is 150,000 and we have 50K jobs, that's recessionary. Usually, around 50K jobs is recessionary because it revises to negative, right? Once we actually get the revisions, we tend to go negative, and then we're in a recessionary environment. But it all comes to what the break-evens are. If immigration is negative and break-even rate is negative 10, to 0K, and jobs are 14K, yeah, we could see all these layoffs, but it's actually bullish because it means the unemployment rate ironically goes down. So Powell color on the break-even rate is critical. This is where we talked about yesterday. If we hear the beverage curve is steep, that's bullish. That's a complicated way of saying it, but it basically means as job vacancies are low, we can actually normalize at a low unemployment rate, creating a steep slope of the line. I really don't want to get into like slopes and lines of all that kind of stuff right now, but it's just important to understand if we hear anything about a steepening, it's bullish. The lower the break even we hear, bullish. So like if you're making notes on a notepad and you're looking for like how to day trade or whatever, in my opinion, The lower the break even we hear from him, the more bullish. The steeper the beverage curve, bullish. Any GDP references about economic strength, especially that blue chip consensus moving up, bullish. Is it normal to see some kind of sell down before the Powie Wowie meeting? Every single time it happens. Is it possible that if we get a bullish Powell, yields actually end up going up? Yes, it is very possible that we end up getting a rate cut and the 10-year treasury goes up to like 4.05 and goes up and interest rate sensitives get hurt. Now, the crappy dappies, okay, this would be like, it's so unlikely to happen, but there is a crappy dappy scenario where Powell basically SH9Ts the bed, okay? It's very unlikely. Very, very, very unlikely. But let's say he poops the bed, okay? Pooping the bed is NQT, 25 BP, signal multiple more cuts, spends a lot of time focused on credit, distress, private credit, and layoffs. Those are all bearish signals, and they are economically bearish. Yesterday, we had the worst day since 1990 on stock breadth. Now, that's not like meat breath, because you just had a big sandwich and you've met Kevin and you had a bunch of, pastrami on it and you got stink breath. No, breadth is the difference between how many stocks are rising versus how many stocks are falling. Here you go. Yesterday, we had the worst up day for the S&P 500 since 1990. So basically what you do is you say we had 200 stocks that went up and we had, 300 that went down, let's just say. In that example, you would be at net negative 100, right? But what we actually had was we had a negative 300, which that means the vast majority of stocks in the S&P 500 were negative yesterday. And so when we take the advancers out of the 500, the number of companies that were positive minus the negative, we had a whole lot of companies that went down yesterday. Now, part of this could be because of this sort of weakening consumer situation. And I'm still having trouble digesting what's going on with Fiserv, because Fiserv is a payment processor that does as many as 25,000 payments per second. This is a financial infrastructure play. If Powell talks about this, it's actually somewhat concerning, because financial plumbing, breaking, is what leads to financial crises. And Fiserv tanking to COVID lows. I kid you not. Look at this. March of 2020. Prices in March of 2020 were higher than they are today on Fiserv, a financial plumbing company. It raises some red flags. Most transactions that Fiserv handles are e-commerce, stores like Macy's. They're basically a payment processor. When you go to pay, they own Clover, which you might see at restaurants. Or you go to Macy's and you go to swipe your credit card on those terminals. A lot of these are backed by the plumbing of Fiserv. And to see their adjusted EPS miss by over 20%, which is an insanely disastrous miss, along with not just their forward, like their current adjusted EPS fell, but their forward guidance on EPS was down 17%. They missed estimates across the board by like 7 to 9%. It was like every part of the business, forecast, existing business, different components of the business. This was a broad-based disaster at Fiserv. And it's taking down consumer stocks. Look at this. Dave & Buster's is basically at the lowest lows we've seen since Liberation. Looks like it continues to trickle down. Six Flags is now losing its momentum. Red Robin's going down. It's actually a miracle that Macy's is positive. Cheesecake Factory down 5%. And Cheesecake's been doing decently. But this is a sign that people are nervous, like, oh my gosh, well, if payment volumes or transactions are getting tanked or a payment processor is losing as much money, what's actually going on with the consumer? Any kind of concerns around that would be, would create some heart palpitations for the Powell meeting today. So watch for that. And this declining breadth is a little bit of a sign that yeah, our market is really concentrated, and rightfully so. Like, Nvidia's pricing power is so large. Like, I mean, I have over 7 figures in Nvidia, so I absolutely love this. Like, don't get me wrong, I love seeing green in my portfolio, but I also have to I have to be an analyst, and I have to look at this and go, this will not last. Like, these growth rates for Nvidia with how much money they will make, they will hit a peak, and when the decline comes, it's gonna suck. That said, I love how much money Nvidia is making right now, and I understand why. The margins are insane. I don't think you can find me another company that has better margins than Nvidia, because they don't even make the chips, dude. They just design the chips. And when people like realize that, they go, what? They're just the middleman? I'm not trying to like water down how critical Nvidia is. The CUDA mode is incredible. What they're doing with automotive technology is incredible. It is a real risk to Tesla. And people don't recognize this. People, the cult gets so mad at me. And yeah, I'm responsible for helping build the cult. But at least I have the balls to tell you when the facts and circumstances are changing. But the cult gets really mad at me when I say that Nvidia's fusion technology built on a Blackwell infrastructure for inference inside of actual vehicles, SoC, system on chips, inside of actual vehicles that can fusion radar data, vision data, LiDAR data, all of it with very low latency for real-time applications. It's a game changer. It's a game changer. People don't see it. But anyway, so this is sort of our pre-Powell prep. Now, does it matter if we get QT today? Not really, because even if we don't get QT today, what we'll end up getting is a setup for a time frame for QT. So even if we get 25 BP and like, hey, we're gonna end QT in a month or two or whatever, that's not that big of a deal. But what I care more about is obviously the commentary, so we'll be covering Powell very closely. Yes, we know it's coupon code expiration day. But what I also wanna know is, well, actually, I guess I know the answer now, because I ran a poll, and I want to just memorialize this. I ran a poll, and I asked you, who's your boy, April Kevin or October Kevin? And the poll results are in. So thank you for voting in the poll, but the poll results are in. Somebody says you mean QE. No, ending QT is not QE, right? Like, you're turning off the vacuum cleaner. So QE, quantitative easing, is running the printer. Yes, we know the Fed doesn't actually print money, but practically that's what they're doing. Quantitative tightening is vacuuming up that money, and pausing QT is turning off the vacuum cleaner and the printer. Like, the printer and the vacuum are off. But anyway, I'm gonna end this poll here. The poll says that 68% of you say that your boy, nearly we're like 1,000 votes in a couple minutes here. Thank you for voting. But nearly out of nearly 1,000 of you, 68%. I'm only disappointed it's not 69. Say that Jose Bond is your boy. So we went from James Bond to Jose Bond. So I appreciate y'all. And to that I say, thank you, mi amigos. Meet Kevin will always be here to give you perspective, whether you like it or not. I'm gonna give you my perspective, because I ain't never gonna bend the knee.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.